The stock market is dirt cheap now if these interest rates were guaranteed for 10 or 15 or 20 years.
And Warren, you mentioned something to me in the commercial break back before, that there is one essential factor that will determine what you think about market prices and market valuations. What is that?
Yeah, I can tell you the right question. I can't tell you the right answer necessarily. The most important item over time in valuation is obviously interest rates. I mean, if interest rates are destined to be at very low levels, not necessarily as low as they are now, but very low compared to 100-year averages or 50-year averages, it makes any stream of earnings from investments worth more money. I mean, the bogey is always what government bonds yield. Now you can pick your maturity, and you see it in real estate. Real estate yields adapt quite quickly and fairly directly with interest rates of an appropriate length. But stocks don't do it as much, but it's the same principle. Any investment is worth all the cash you're going to get out between now and Judgment Day, discounted back. Well, the discounting back is affected by whether you choose interest rates like those of Japan or interest rates like those we had in 1982 before Paul Volcker took a sledgehammer to the economy. Right. So when we had 15% short-term rates in 1982, it was silly to pay 20 times earnings for stocks unless you felt that the world was going to change in a very material way. Well, it's a huge bargain to buy stocks now if you knew these interest rates would stay at this level. And you could buy 30-year bonds. I mean, in Europe, they've been selling 50-year bonds. So, I mean, people are making a judgment every day. I mean, the yardstick is there. It's just a question of whether you believe the yardstick or not. But that is something we don't like to incorporate into what we'll pay for a business, but it is incorporated in the market. It's not fully incorporated in the market. The stock market is dirt cheap now if these interest rates were guaranteed for 10 or 15 or 20 years. And of course, a 20-year bond, that's you are in a sense making that kind of commitment. But that's the big thing investors have to think about.